sector. Our next speaker will break this down for us, looking at, like I said earlier, going from competition to collaboration, navigating shared infrastructure and platforms. He is an IT leader who has shaped digital transformation strategies across several enterprises, and he's already on stage, and has a decade of experience in IT security infrastructure, systems leadership, having delivered high-impact projects from cloud migration to legal blockchain implementation. At his current station, he leads the charge on data protection, cybersecurity governance, and digital systems resilience, playing a vital role in safeguarding the organization's technology ecosystem. Help me welcome Group Head IT Security and Infrastructure, Platcorp Group, Mr. Francis Mwangi. Karibu.
Thank you, Njehia. Asante sana. Looks like I was very eager to get on stage. But good to see you all this morning, and I'm excited. I'm excited to be here. The conversation has been very interesting. We're talking about financial inclusivity and open finance, and just in terms of how within this sector people can be able to collaborate. Now, imagine with me that we're all on a journey from Nairobi to Mombasa, and we all need to get there using our various means of transport. But somehow, when you, of course, get from Nairobi to Mombasa, there's only one road to use. When you get there, you find out that it's a private road. So what do? You have to build your own road to get there. Yeah. So that means that there are people who, if you're the owner of the private road, then you get there faster than everyone else, because as everyone else is trying to chart their way there, you've already gotten there. So we can look at infrastructure that way, and we talk about shared infrastructure, using shared infrastructure to collaborate more than to compete. So if you look at where we've come from, like traditional infrastructure is owned by the institution, okay? In most institutions, their core banking systems, security operations, and even the data centers, all owned by the institution. And of course, there's a good reason for that, because they wanted control, okay? Everyone wants control of their environment. Okay, but it's no longer feasible for us to continue operating in those silos, because the world is changing, as we've seen, and a lot has happened in technology. So we need to shift away from these silos. The standalone systems have become costly and redundant, okay? Because even for you just to maintain your own data center as an organization, for you to be able to build up your security operations center from scratch, I think we saw from the presentation earlier in the morning that I think the cybersecurity budget is at about, is it 4 billion currently, or what was it? 4 billion is the loss. Yes, 4 billion is the loss. Yeah, but cybersecurity budgets keep busting, okay? And so because of that, it becomes very costly to continue operating in these silos, okay? So collaborative architecture is what we need to look at, because it's going to improve scalability, okay? For organizations to be able to scale at a very fast level, they need to collaborate and stop operating in these silos, okay? So as I was saying before, think about roads and rails, okay? The ones that have been built together to allow everyone to use the same road, but you determine the kind of vehicle that you want to use, okay? So, and then also hybrid models plus shared infrastructure. So why is collaboration no longer optional, okay? So number one, escalating cost of compliance and security costs. We just talked about it. When you look at, for instance, let me take you to the next slide. When you look at this slide over here, regulators are asking banks to budget more for cybersecurity threats, okay? And it says that 95% of banks have budgets for cybersecurity. The other 5% are on need basis, okay? It's as and when it's needed. So what does this tell you? That because of what we were told earlier on, that the cost of cyber breaches today is 4 billion in Africa. So it means that we need to invest more in security. The cost is not gonna come down. It's just gonna keep increasing and increasing because of the advanced persistent threats we have today. We've got ransomware as a service today. We've got artificial intelligence now being used to propagate some of these attacks. So we can see that now that because of that, we need to collaborate. We need to have these collaborative threat intelligence sharing platforms where people can be able to share information about what are these indicators of compromise, what are these new threats that we've discovered, and share it across all of these platforms so that organizations are not doing this by themselves. There's no organization that can be able to see the whole spectrum, okay? We need to do it together. And then, of course, because of the escalating compliance costs, organizations today are being fined heavily by the regulators. Talk about the Office of the Data Protection Commissioner. Most organizations have experienced this because of a breach of confidentiality. Then, for the customers, all they want to do is have a seamless experience, seamless service. Today morning, we were talking with Jay here, and we were thinking about the cab hailing services. For a moment, if you wanted to request for a cab, you either have to go into the Uber app, the Bolt app, and all of these other apps that we have. But wouldn't it be nice if you had a single platform where you can just get in and request for any cab that you want from there, and you can get comparative pricing and comparative reviews for every one of these taxi hailing services. So that's in a sense an example of the collaboration that we're looking for. Think about when you get into the eCitizen platform and you have all of your services at one glance. You can register for your business, apply for a passport, apply for a driving license, all from one platform. So that's what customers are looking for: faster onboarding of customers, and even just for them to be able to get their services very easily. Open banking and API-led innovation. Most of the speakers who come before me have talked a lot about this. We've seen Rosemary Kimwatu, who came today and told us about what people are expecting to see and what players are expecting to see in this space so that they can be able to have a fair playing ground. If everyone is going to participate, then these open banking platforms do not need to be owned. There should be no gatekeeper to these platforms, because it will create the perception that this platform is owned by a specific few, a special few, and so there'll be less participants, okay? Then regulatory harmonization across Africa, okay? Because we'll begin to see that instead of relying on these global standards and frameworks, we can now begin to build our own frameworks, as even Rosemary was mentioning before. We can build our own frameworks and standards that we can rely on. And then, of course, modernization basically just it requires a collective effort from all of us. So some of the platforms that we've been able to see within Open Banking API, you guys know about M-Pesa, G2, and Daraja. You've been able to see things like M-Shwari, collaboration between M-Shwari and Safaricom and NCBA, or M-Pesa and MCBA. Digital identity ecosystems, such as the electronic identity systems, the SIM ID, and the KYC platforms. Then cross-border payment rails, East Africa Payment Services. Fidelis was here earlier from KBA. And the Nigeria Interbanking Payment Service, okay? So these are platforms that are enabling cross-border payments to become easier, because you can make your payment in your local currency and you can get to the person on the other side in their local currency, okay? So begin to break the currency. Threat intelligence networks that we're talking about. We can build a threat intelligence community where you can be able to share threat intelligence information and begin to do tabletop exercises, begin to collaborate even with red teaming exercises, okay? So still on the case studies on collaboration, we've seen that with M-Pesa, we've seen that with Kenya's eCitizen and Huduma number, identity services. PesaLink, there was a representative earlier here who talked about the integration for PesaLink. So we have a lot of case studies that we can see that have worked, and we can build up on them. At the organization that I represent, Platcorp, we are relying on a SaaS core banking solution, which is known as Mambu. Now, Mambu has a lot of customers globally that they are serving. And so because of that, of course, there are a few concerns from many players out there. How do we host our core banking solution on a multi-tenant platform? Yeah, but because in security, we talk about various security models. Yeah, there's a security model that's known as the Chinese walls, which really looks at the issue of conflict of interest. Okay, so if you're handling one customer's data, multiple customers' data, how do you separate? How do you segment that kind of access control and ensure that the confidentiality is maintained and the integrity is maintained across those platforms? Over and above that, we also have a couple of Platcorp has a couple of subsidiaries. If you've heard of Platinum Credit, Premier Credit, Momentum Credit, all those are our subsidiaries. And one of our subsidiaries, Premier Credit, has partnered with Nabo Capital to be able, because we are a digital lender. We are not deposit taking, but we've been able to partner with Nabo Capital in order to provide deposit taking services through a service called Nabo Save, or through a product called Nabo Save. So that's an example of the collaboration that we're talking about. So what we're basically saying is we need to identify the areas where we compete and where we collaborate, okay? And I like this famous statement that you compete, you collaborate on the plumbing, and you compete on the polish, okay? So the plumbing represents the infrastructure. The polish now represents what kind of product you're presenting to your customers, okay? So in terms of competing, what kind of customer experience are you giving to your clients? What kind of brand are you building? What kind of pricing are you giving? And what's your innovation velocity? How fast are you able to churn out new products? On the collaboration, we're talking about the digital rails, the KYC infrastructure, because why do we all have to build our own KYC engine? Why can't we all just have one common KYC engine and we agree on the rules of participation within that KYC engine? So that will make it easy and it will reduce costs for us as an organization. Cyber threat intelligence, I've talked about that a lot. I don't want to belabor the point. And then regulatory sandboxing and compliance tooling. So can we now test these open platforms in a safe space before we now roll them out, okay? So why the big fuss? Why do we keep talking about collaboration and open finance and all that, okay? So there is lower cost of innovation and compliance. And this in turn now for you as a CIO, it spells out the fact that you will be able to now go to your board more confidently, because with collaboration, it means you're not the only person that's investing in this technology. You're doing it collectively, which means the cost of investment is lowered, and therefore you would probably, it's debatable, but you probably have an easier time selling it to your board and to your executive. Okay, greater reach, especially for the underbanked. We've talked about financial inclusion a lot. So some of these platforms will be able to achieve this for us. Improved speed to market, especially because of the innovation that we've talked about. Stronger collective cybersecurity and enhanced resiliency during shocks or crisis. So what is it that's going to make this work? What will make this collaboration for us work? Okay, clear governance. We're talking about coming up with our own governance frameworks. Okay, how do these governance frameworks work? Okay, sort of like think about it when you're joining a network. Okay, when you're coming to an organization and you want to join the network and you're coming with your own laptop, there is network access control, which there are various rules that you'll have to meet. Your computer will have to have a certain specific antivirus, has to be up to date, has to have all the updates, and it has to be running a specific operating system just for it to be able to join the network. So translate that to players within these open banking platforms. What are some of the minimum baselines that they have to meet for them to be allowed? So the regulator will be able to come up with those baselines. Neutral ownership, like I said before, we don't want the perception that it's some players who own this particular platform. Otherwise, it will discourage and bring hesitation when it comes to participation. Then what are the incentives for participation? What incentives do these players get, different players in this industry get for participation in these open platforms? And then, of course, layered access controls for security. So you don't access what you don't need. Access is only on a need basis. Shared infrastructure must be fair, flexible, and future-proof. What are the risks that we need to look out for? Of course, data sovereignty and cross-border regulation. What do we need to look out for in terms of that? What are the regulations in different countries that we need to adhere to and to watch out for? Governance models, inclusion and fair representation, financial exposure, cyber risks across connected systems, and competitive integrity. So what's the mandate of the leadership when it comes to enabling people or organizations to participate? So I think the key thing here is to reframe collaboration as a competitive advantage. Don't look at it as if I participate in this kind of collaboration, then I'll lose my competitive edge. I don't have the control anymore of my infrastructure, so I'll lose the competitive edge, and we are now innovating at the same rate with everyone else because it's a fair playing ground. So we need to change our mindset on that. We need to invest in a trust infrastructure, okay? So because trust is everything. If people don't trust the infrastructure, I mean, when cloud was becoming a thing, you remember the perception that people had. My information is gonna be out there, so who has access to it, okay? But that has changed steadily. And then align to strategy to ecosystem thinking, okay? Building capability and not just infrastructure. So those are the things that as CIOs and even as the leaders within the industry and as CEOs that we need to look at as we think about collaboration. And then finally, alone we go fast, but together we go far, okay? So this is a very common phrase that we like to refer to. Because yes, alone you can go very fast, but there's strength in numbers, right? And then collaboration is not equal to weakness, it's strategic strength, right? Then shared infrastructure is the future of the African finance. That's the way to go today. You don't go at it alone, but you collaborate. And that brings me to the end. Thank you.
We have any questions for Francis? He's actually doing, it's what, your thesis?
Yes, I'm working on a smart contract application as part of my thesis for my doctorate. And it's basically just looking at how do we secure the loan approval and loan disbursement cycle, the whole process, the entire process. And it's good you brought it up because I think you gave me a different thinking even towards collaboration because if this platform is deployed, it can look at handling issues to do with fraud, issues to do with KYC and credit scoring, and it can be done as a shared platform. So it's trying to look at it that way, and even partnering with guys like KBI who are here earlier on, just to see how that can be achieved.
Excellent.
Yeah.
And I think when talking about shared infrastructure, I'm reminded of, at least in Kenya, there's a telco who said, specific to SACCOs, they said, imagine you're trying to access your funds or you're trying to access services, and for whatever reason, the channel that your SACCO is using is down. Mm-hmm. I'll go back to USSD. You're dialing, unavailable. Would it not be great if you had an alternative to the same backend? Like I don't have to utilize, like with, say with Platinum Credit, I'm dialing the USSD code, it's not available for whatever reason, but I can now dial this other code by the telco that has listed all providers, giving me, like you can see, it's shared infrastructure, saying that I'm not able to access through this door, but I can access the same services through this door. So it's actually beneficial when you look at this from that perspective.
Yeah.
And earlier we had that conversation around the cybersecurity concern as well. It's the global players, because each and every of our organizations are plugging into them. Then they're getting this common gut or common pulse that then gets resold to us at a premium. If we agreed amongst ourselves to collaborate, any negative signal, or also shared infrastructure is about the positive signals that we get. Can we combine that and enrich our own infrastructure and reduce the total cost of ownership? And like you said earlier, and I love it, let's now compete on customer service. Let's now compete on the product itself, not on the operational stuff. That you've got your own cost, and most of us don't even utilize most of these licenses to the max, right? So what if you had shared infrastructure that allows all of us to run our ships much more efficiently? Do we have any questions for Francis? Yes, a comment at the front. Roving mic, please. As the mic gets there, the other challenge, of course, it means that the uptime for this shared infrastructure, what is it? It needs to be 100%. You can't even have 99 uptime. It just needs to be always on, always up.
So something to add over here to actually on the shared infrastructure, not just shared infrastructure. In 2018, Uganda launched its shared agency banking platform. Same agents working across banks. So out of the 25 banks, 22 banks subscribe to it. I just have a few numbers over here. So 20,000 agents serving more than 500,000 customers annually. And this is all banks, not just one bank per agent. Generally, you have one bank, it has its own agents. So these were agents across all banks. 4.6 million transaction worth $1.4 billion just in a single year. And what had happened was it reduced the service delivery cost for banks, expanded financial inclusion, created income opportunities, especially for the youth, because they are becoming bank agents now, and encouraged banks to compete on product quality rather than the branch network.
Exactly.
So it actually, you will be able to compete on the things that matter, not just because you are operationally present over there. So not just shared infrastructure, but shared people as well.
That's true. Thank you.
Excellent. Thank you for that insight. Any other questions, comments? Help me appreciate Mona Francis on that.
Thank you.
Excellent presentation. And now we go into a section that looks at the challenges of innovation and regulation. And this is particularly around the cross-border challenge. And interestingly, I just saw a press release of Airtel and one of the Pan-African players signing something that is actually going to enable more PSPs to do cross-border payments more efficiently. And this is smack in the middle of this particular conversation. We're looking at the fact that innovative financial services can actually be borderless. We're dealing with technology. If you give an instruction to send money to Ghana in CDs, can be done in an instant. But we know that the regulation will probably not follow suit just as fast. So bringing together these voices that will look at how we tackle this friction across Africa, whether you're looking at data residency and licensing, this fireside chat will help us understand these tensions and opportunities of scaling finance beyond borders. I think one of the greatest disservices we make, or one of the greatest challenges we have as a continent, is that we're still, how many countries are in Africa? How many? 52. Fragmentation. We're not one homogeneous market. If you go to South America, massive market of one. If you go to North America, massive market of one. So how are we looking at these challenges? And of course, our moderator for this session is none other than the head of content Africa, CIO Africa by DX5, Ms. Carol Odero. Karibu.
Hi everyone, good afternoon. I was waiting for Mbugo to introduce me with sterling words and he failed to, so I'll just be Carol for today. And my panelists, please join me, Juliet, Victor, and Timothy. And Mbugo also introduced my topic. He talked about the cross-border challenges, something that is as beautiful as, say, M-Pesa. We use it, but do we really think about how to send money from, say, here to Rwanda or Tanzania? and the challenges that probably they had to go through with the regulator in order to make that happen. Why? I'm good. Okay. All right. So I'll just have you introduce yourselves briefly and tell us what you do. And as I usually end up having to ask this question when it comes to regulation versus innovation, is the regulator a friend or a foe? Yes. Timothy, I'll start with you.
All right. My name is Timothy Laku. I'm a fractional CIO CTO. Having worked with so many startups and impact organizations across the continent, the answer would be the regulator is the friend.
Okay.
Can you hear me? Okay. So my name is Juliet Minor. I work with the Better Than Cash Alliance. It's actually a UN-hosted alliance of members that really think about what is better than cash, which in our case we all know is digital. And so it's comprised of government agencies, private sector players, and development actors, among others. So I have a legal and regulatory background, so my answer is always yes, the regulator is a friend. I think it's just how we address certain issues. Thanks.
Okay, good morning, everyone. My name is Victor Odada. I head strategic partnerships for M-Pesa. So yes, normally the telco that is in the house, as I think was mentioned earlier. Regulator is a co-collaborator. I think that's how we look at it. You need them more than you know, especially when things go wrong. So I would always say a collaborator.
Maybe we should have gotten an innovator to tell us what they really think. But Victor, while I have you, if I send money to, say, my relatives in Tanzania, and it's great that I can do that, but how many different regulatory frameworks does that money have to pass through in order to get to them?
Okay, normally that transaction will take, give or take a minute. But to your question, let's just break it down. So in Kenya, you will go through, you have to notify CBK. You have to capture CBK. You'll have to capture for CA. You'll have to capture for, CA is the Communication Authority of Kenya. Obviously, I'm sure you all know that. From a cross-border perspective, you've also got to go, first of all, to the Tanzania Central Bank and also Tanzania's Communication Authority. So that's already counting 4. Then in between, you've also got to ensure that you're compliant with the East African Community protocols. And lastly, you've also got to ensure that you're compliant with your AML, CFT requirements, both from locally and also internationally. So give or take, you're counting between 6 and 7, depending on which path you've taken. So yes, the transaction to the consumer, it is give or take a minute, which half the time they actually complain it's taking too long. But you've got to ensure you're compliant. Oh yeah, I forgot one more. You might find Safaricom, you know, on this side, we'd also have our own compliance checks. Then you'd find, let's say, for example, Vodacom in Tanzania having its own compliance checks. So yeah, 7 or 8 in total.
In a split second.
Yeah, in the span of almost a minute.
Okay.
But that's the beauty of automation. It ensures that you've got to go through these hops to ensure not just the sanctity and the trust of the platform that you've created, and the fact that consumers can also then send larger amounts. I mean, think about it. If you look at the journey of just M-Pesa, it started off with someone, people are comfortable sending 100, 200 shillings. And then now, based on the trust you've grown, is where now people are comfortable even sending 250,000 shillings, 300,000 shillings. So the reason for all this is to ensure that you can retain that trust.
Okay, and Timothy, keeping in mind what he said, if I am a fintech, I have to consider the customer journey and all those hoops that I have to jump through. If I'm a fintech and I want to operate in the East African community, what is my experience like?
So it's so the way I normally put it is it's basically like you're starting 5 different companies, right?
Yeah.
So you've set up in Kenya, you've set up your model, you've tested it, it's working, you've validated, everything is okay. You are in alignment with the regulator, you've got your team, you go to Uganda. The KYC process there is different from here. The requirements as far as licensing in Uganda would be different from what is actually here, right? The cost for that licensing is completely different as well. The playbook for the regulator as far as what it is that you're doing is concerned in Tanzania would be completely different from what you actually have in Kenya. So it's like going to Uganda and starting a whole new company all over again. Build a new team, set up a new office, go through the whole loops again, the way you did in Kenya. If it took you 1 year in Kenya, you're probably going to do exactly the same. An example is a startup I was working with a couple of years ago called Bringo Fresh. They wanted to launch in Kenya. They had set up in Uganda for maybe about 5 years. And the steps and processes that we had to go through in terms of registration, reporting, formatting, all of that took us almost a year just so that we can actually establish here, right? So that's the way I say it. If you're thinking of expanding regionally beyond the country where you already had grassroots set up and all of that, going into a new country is essentially starting a whole new company all over again. And you have to basically prioritize for that as well.
So when they're starting a new company and you're advising them and they're spending money on the making of the product, do you also tell them to allocate resources for the regulatory frameworks?
Definitely, definitely. I think what we've, at least in my experience over the last 15 years, is that you're excited about the product, it's a digital product, it's working in your country, and you want to expand to a new country in Africa, and you're thinking you're going to spend 70% of your budget on the technology. The dev people, the people in the back end, the sales people, all of that. Then you set up in Tanzania. And before you do anything, you have to go through the regulator. And then all of a sudden, you need to hire lawyers. You need people to come and review your system. You need to basically start to become compliant before you get that license. And it's going to take you some time. So all of a sudden, the 70% you are allocating for your systems and your platforms is going to end up going into regulation and compliance. And then all of a sudden, the team that was ready to start, they can't start, right? 6 months passes and they're still sitting there waiting until you get that licensing. So the advice I give guys now is start with compliance. Invest there first. The first hire you have in a new country, be a compliant advisor. Let that guy be the guy who guides your company. Before you do anything, invest there, give them the money, give them the first initial role. Before you hire your developer, your front-end guy, your salesperson, your admin, get a compliance advisor first. Then that guy is going to lay the groundwork for you to be able to set up your company in that country. So that's, it now shifts. Put 60% of your money when you're starting this new organization in this new country towards compliance, and then the remaining 40% in the initial 1 year for other supporting staff.
And he still thinks the regulator is a friend. Okay, so Juliet, when it comes to the regulation innovation conversation, what is the biggest friction? Is it that the innovators don't get the challenges of regulation, or the regulator doesn't understand the innovation process?
So I think there's two of the two things they've both mentioned. One, there's obviously a lot of regulatory authorities that people are having to deal with at any given time. And so when those authorities are not aligned, they are not governing or regulating in the right way. They're not governing for innovation, they're governing for protectionism. So I think that's one big challenge where regulators are not speaking to each other. So that's in one country, I think those were 3. You cross the border, another 3. So by the time you finish 50 plus member states, then it stops making sense. So I think the biggest friction is on both sides, really. The regulators are not speaking to each other. They are not harmonizing. So everyone wants to be siloed. I think siloed is usually the buzzword. It's a very siloed approach. And then I think from the innovator side, I think what is also narrated is probably a best case scenario where you actually realize you can engage the regulator and get compliant. But I think in some scenarios, you'll go ahead and spend a lot to innovate, get into the country, and that regulator is just not aware of you and is not willing to approve your operations at all. So I think on this side, yes, this is a very good point. There's a lot of awareness in terms of regulation, compliance, and also actively engaging the regulator. There's no harm in going to see a regulator, easier said than done, but there is no harm in approaching a regulator with a good product, with the appropriate safeguards, and there's always a possibility of getting licensed and being operational, I think, in an easier way than having to think of compliance at the bottom or at the end of the process. So one is the fragmentation, I think, and then maybe the last is they are not also speaking to each other. So I think sandboxes are great. I think trying to avoid the quicksand, as it was called earlier, is also really important because some also get stuck there. But we've seen some good products coming out of regulatory sandboxes, and I think maybe making that system more efficient, where innovators and regulators sit together, understand the challenges, educate each other, and then they can now create the appropriate frameworks.
This would be an unfair question to ask you, but Fidelis Muya, when he was here, he said that the regulator's first instinct is to always say no, then say, okay, now impress me. Why is that the approach?
I mean, if you put yourself in the feet or in the shoes of a regulator, their job is financial risk, managing financial risk, maintaining stability, integrity. So if they don't understand something, unfortunately, their approach is not to go and understand it. It's to say, no, we have other problems as it is. So it's just a mindset shift, perhaps, but I think that has been the current approach. And so again, back to the sandboxes, if we can get people in the room speaking to each other, unpacking, it's a lot of demystifying that needs to happen for regulators to trust innovators and innovators to also trust regulators to go to them without having to operate, in a clandestine manner. They can easily approach them, get that kind of discussion going, and then get approved.
Okay, all right. Victor, with M-Pesa, there is a lot of innovation that went around it that came out, and we are still singing the praises of M-Pesa many, many years later. But it's possible to have a regulatory framework that is innovative, the way M-Pesa was innovative. Can you have a regulatory framework that's, dazzles the innovators, for instance?
Yes, it's one of the few things I think we've been able to do with a national payments part of, for example, CBK, Office of ODPC, and even CA. Now, I think as correctly been mentioned, you find a situation where the continuous engagement leads into being able to collaborate effectively, and for you to have forums where you can be able to then showcase. Forums like this, for example, you can be able to showcase capabilities. The regulator is also able to experience the same capability in, if you want to call it an open, safe space. Because unfortunately, sometimes what we end up finding ourselves is you only reach out to the regulator when you want an approval. So as correctly put it, you find the regulators on the back foot, so they're just saying no. But when you can take them through the journey in a safe space where there is no pressure, they're able to also understand it, they can ask questions, and you can co-create also at their pace while you still try and pressure them for us to be able to move in terms of global pace and standards. Then you find yourself in a position where we're able to offer a lot of the services you see in the market right now. I mean, if I was to take you back 10 years ago, services like collaboration with M-Pesa, like PesaPal, would never have happened. Now it's available. If you look in terms of what we're able to do with the likes of Visa, 10 years ago, that would be out of the question. But now it's the same regulator now understands it and is even pushing you more and more towards it in terms of let's have your ecosystem work with all other players in the market to enable, as they always put it to us guys, enable the Mwananchi to be able to move money how they want to move the money. Now, that's what you've got to do with the regulator. You've got to carry them through the journey. And if I think even for fintechs, it's important to be able to have sessions where it's not just, I know people insist it's always the bigger players to do it, but everyone, even fintechs, has the opportunity to engage with the regulator in various forums. And I think BFSI, CIO is one of the best forums around this, where it is a comfortable space for even the regulator to be available. Take them through the concept, think through it, have workshops, have whiteboard sessions. And that way, you're able to get yourself into the, if you want to call it, this safe space that, for example, we kind of do find ourselves in. That's why I always say the regulator is a collaborator, but it's about how you see them. Yes, they can be the police if you want them to be, but if you warm them up to it, they're quite collaborative.
So is there an instance where if you're an innovator, you can sort of embed the regulatory framework into your creation?
Yes, in fact, if you look at something like even M-Pesa was built with controls and regulator, if you want to call it, inherent. We didn't plug them in, we didn't bolt them in. It was built with the risk already thought in terms of things like AML, security. If you look at, for example, for you to access the service, you must have a valid SIM card, first of all. So that entire process ensures you're already compliant by the time you are going through the journey. So a fintech also can't do the same. It's very important to always, and I think we all taught this, and it's best practice, build with compliance in place. And in that case, then you find a situation where it's easy to push the solution, not just locally, because remember, we're no longer just building locally, you're building regionally into globally.
Okay. Okay, and if we create this safe space, Juliet, I never thought of regulators as needing a safe space. I suppose everyone does, though. Is it possible to have a unified regulatory framework in the continent, or are we just doomed to have a fragmented one?
That's such a loaded question. I think 50 plus countries, our African leaders, as we know them, I think it's a challenge. I don't think it's impossible. I think we can also take a block approach where we start, EAC is pretty well integrated, ECOWAS, COMESA. SADC, we try now to engage them on that level where they have one framework. So instead of looking at 50 plus, we're looking at 5 or 6. Then that's probably more feasible. But I think the challenge is just what we're discussing here. It's a lot of lack of awareness about what's happening across border, disinterest also to some level, because that's not my jurisdiction. I don't need to be concerned. But if we're really looking to have an integrated continent, then yeah, there needs to be a breakdown of some of these silos within country and across. So I will remain to believe that it's possible.
And Timothy, how would a startup be able to embed compliance into their framework? Like Timothy says, like Victor has said, it's possible. If you're advising and they want to set up, from day one, how do they integrate that into their system?
So I think the first thing is just to appreciate that compliance shouldn't come at the very end. and one of the speakers mentioned that. You want to start with compliance as the first thing you want to tackle, right? It's going to inform the technology stack that you're going to build. It's going to inform how you're going to expand into different countries, because you're asking the question of, how do I become compliant in Tanzania? How do I become compliant in Uganda before I get into those markets? That conversation needs to happen fast. So just by flipping that mindset and saying, let me start with compliance as the initial conversation and not at the end. The mistake we did when we were building Flip Africa many years ago is that we built for Rwanda and Uganda, and we did not consider all these other markets that eventually 10 years later we would want to expand into, for example, right? And so that became a problem. The second one would be, there's something called geofencing of your data, right? Every country has their data protection laws and regulations, right? You're collecting data for people in those particular countries as part of your customer onboarding, you're storing them somewhere. So in order for you to be compliant, the Kenyan data needs to be separated from the Tanzania data, which needs to be separated from the Uganda data. So you need to be able to, at the very beginning, when you're building that architecture for your technology stack, that is there by design. The mistake people usually do is that they have one big database, they put in Nigerians in there, they put in Tanzanians in there, they put everybody in there, and that is not going to be compliant as far as the data protection is concerned for those individual countries. So how do you start by making sure that those things exist outside of? The third one would be what we call the compliance engine. So there's a mechanism that within your technology stack, you can have each country's compliance catered for. And so if someone is from Tanzania, for example, and they're a customer that is being onboarded, that compliance engine will determine what rules apply to that particular customer. And so as they're being onboarded into the system, they will move through that journey for Tanzania so that you're immediately compliant from day one. Not worrying whether the customer has been onboarded and is sitting in the database for Kenya, when you could have the compliance engine in the middle that actually manages that. And then the last one would be, how do you make sure that when it comes to the things you do for each particular country, you do them in a modular way, meaning Kenyan stuff are done within the Kenyan stack, Tanzania stuff is done within the Tanzania stack, so that you don't have one big Africa, Pan-African stack where everything is being done, and then you're worrying about, am I compliant in this country, am I compliant in this other country? So I think that, in terms of architecture and thinking, is essentially what I would tell startups to start to think about. Start with compliance, go through geofencing, go through modular building, go through what is called the compliance engine, and then set it up that way. I think when you do it that way, you are always going to be compliant.
How much does compliance cost a startup? Because if you have to go through all of this and you have to think about that process and you're thinking, I have a shoestring budget, I have an innovative idea, I am so brilliant, but then you hit regulation.
That's true. That's true. And many who have wanted to expand to new countries, when they look at the cost of it, they couldn't do it. So many that I've worked with over the last 5 years, they're like, okay, I'm good. I'm in Tanzania now. I want to expand to Kenya, and then they're like, the cost of compliance is too high. You know what? I'm still gonna scale here. Let me stay here. So the initial jump is usually going to be stopped because of the cost of compliance. I mean, everything I've talked about, the amount is massive. If you have 100K and you're expanding into, I'll give an example of the budget we had when we were expanding from Uganda to Kenya and Rwanda with Flip Africa. We had a budget of 100K, and that was supposed to be 70% dev, building the platform and the product and working on the product development. That flipped. So 70% of that had to be spent on compliance over a period of 12 months. You don't have any money to do any product development after that. It's gone. Yeah. So it is a barrier. It is an issue.
Are you sure the regulator is a friend? Okay. I'll keep coming back to that. Victor, how does M-Pesa do it? You have data across different regions, but you have to be governed by different regulatory frameworks. How do you navigate that? And what are the conversations you need to have in order for that to happen?
Okay. I'm sure we all understand the concept of data residency, which is now big for us in Kenya. So what we end up doing is we have federated systems. So data never leaves the country. We only share the relative, what you call metadata that needs to be sent. So for example, the transaction reference and the amount, that's it. But the checks, we will check, for example, on our side, and let me use Tanzania as an example. We will check on our side to ensure that the number is valid, the individual actually does have access to the service, and they have the right KYC and all other checks, AML, CFT, or all that is sorted. Then we will only send, as I shared, the required metadata to Tanzania. So there is we never share, like for example, KYC information, but that never leaves the country. So Tanzania will also do their check on their side. So the individual, the person receiving the money, will ensure that the account is valid. It is within the regulatory framework. Then they'll also just confirm the amount and the reference. Once that's done, then the transaction kicks off. So there's minimum to no sharing of personal data across board. But obviously, I think as is correctly mentioned, this requires both parties to be at the same level of technology, if you want to call it evolution. So whenever there's a disconnect, then you find a situation where now you've got to think outside the box, and then again work with the regulator. Yes, the regulator is your friend, to to figure a way around this. So some partners you might find you have to use different technologies. There's mirroring, but again, you've got to ensure that this is within the scope of the law, and ensure that both parties are evolving towards the same level. And that is why, if you ever notice, certain countries you can't quite send money to, because if you want to call it, the level they're at is the disparity is too far that you cannot be able to offer the service. So then you cannot just send money through the traditional, let's say, for example, the digital mobile means. You might have to go now into the more expensive means through banks, through partners, so on and so forth, which kind of then beats the purpose of an interconnected Africa. I can mention the fact that ESC is trying to come up with at least policies that we all must abide to, and also the African National Union is also trying to help with this piece. But unfortunately, our bodies are not moving as fast. But I mean, Africa is still the next frontier. Let's not give up on Africa. we, we will do this. I still believe as a bloc we have what it takes. And as Kenya, yes, we've pioneered, and in some instances, it is part of our responsibilities between countries like, for example, I would say from West Africa, Ghana, Nigeria, East Africa, you've got Kenya, you've got Tanzania, South Africa from the south, to try and keep pulling all our brothers and sisters up towards this journey.
Okay, Juliet, I'd like to be in the room when ECOWAS and EAC and all these other bodies are having conversations. Like, how does that play out? Because partnerships are so critical for cross-border payments. You know, you can't do it alone. You need to build a bridge. But how do you start this conversation? How do they play out? How do you end up getting buy-in?
So I think maybe starting from a more continental level, we are trying to establish an African one market area under the Africa Free Trade Continental Trade Agreement. And so under that, we have annexes that include annexes on digital trade. So if you think as trade as the driver, then payments has to follow, data governance has to follow, ID, all these things have to be integrated. So as of today, I think we have about 48 countries that have signed up to this digital trade protocol. And so already there is buy-in, at least at a presidential level. Now we're working it down to the operational level through the regulators and the relevant agencies. So I think already there's a framework. Now getting it to the point where it's impacting the users, that's the journey, that's the tough part. So if we say, all countries have signed up. Within EAC, we have 8 member states. They're now harmonizing through a payments plan, cross-border digital payments plan. That's already one block that's done. And then now you look at COMESA. So by the time they're coming to speak to each other, there's already some sort of framework. So I think the short answer is there is an overarching framework that needs to now be implemented, and now it's an ongoing process. I think some of these progressions only happened as of February, early this year, and this is AU and the Secretariat under the AFCFTA and PAPS as we know it. I think that is probably a separate discussion. But I think there is momentum. There are conversations that are already going on. I think just really getting it to the point where it touches the underserved, the unreached is where we are now working on.
Okay. And Timothy, finally, before you open it up for the audience, if I am a fintech founder and I want to expand, what advice would you give me?
The regulator is your friend. I'm serious, because remember we're building this startup, we're creating this business concept, or we are starting this initiative because we are trying to serve a customer in a country, and that customer needs to be protected. That customer needs to, who is going to protect that customer, right? The reason why I keep insisting the regulator is your friend is because if the customer is the one paying you for the service you're providing or the product you have in the marketplace, whether digital or not, someone needs to protect that customer.
Yeah.
And most of the time, it's not going to be you who is the owner of the product or the service. You have conflict of interest. So therefore, yeah, just work with the regulator, be visible, engage with the regulator, invest in the cost of compliance from day one, because to me, that is better customer experience.
Okay. All right. Anybody have any hard questions for the panelists? Any fintech founders who want to know how to expand? Yeah.
Hi, thank you for the wonderful session. I just want to understand, so apart from innovations, do you think the idea of a single currency, local currency beyond dollar will also play a good role, or if you have some views around that? Especially for Africa continent.
Wow, I really took it to heart when I said that question. Okay, please go ahead.
Okay, I'll start off. For the benefit of, if you want to call it, all Africans, yes. Why? Because there's a lot we lose, or it depends where you sit. You can win, you can lose in FX. And I'm talking for the, if you want to call it, the local, the common African. Obviously, for most businesses, that's where we do make money. But yes, if I know my 1 Kenyan shilling is also the same 1 Kenyan shillings, let's say, for example, in Ghana, then I'm able to even project, for example, my costs better and even be able to send money a whole lot faster. The understanding of FX is one of the few barriers we do face, specifically when it comes to cross-border, and a lot of education that goes into it. So yes, it would be a big plus, though it would also work kind of negatively for commercial businesses. But if you want to call it for the African mwananchi, let me use that word, yes, it would be perfect.
Yeah, and just to add, I think I sometimes like to compare us to Europe, although it's obviously a different place. But I think even before this dollar, I mean, this single currency, they had a similar problem. Each country had varying currencies. Perhaps they had a bit more alignment, but they definitely did have this kind of challenge, at least around FX. So I think it's important, and obviously that's what really creates a one market area, but difficult. It's also difficult. I think we know how much foreign currencies are in our market, are in circulation, but still possible at some point. Yeah.
Okay. Any other questions? Oh.
So hi, so my name is Geoffrey, co-founder for Lipaware, which is a platform that helps banks to launch banking as a service, as well as a white label payment gateway. We work with a lot of partners who are looking to us about the future. There's one thing that's really been at the end of what we talk about, which is the payment gateway, as well as the banking as a service platform, is what do you think about Web3? We have we have ideas. In fact, part of our team we've experimented also building an exchange, but we can't really take it to market because, as we all know, Kenya lacks the regulatory framework for digital assets and cryptos. So just to piggyback on a point that Victor, you made, that M-Pesa, Kenya was the first sort of big major success from a mobile money innovation point of view. But that was almost 20 years ago, 2007. Today, actually Kenya is lagging behind when it comes to digital assets, regulatory framework. We've seen the likes of South Africa, Nigeria, really embracing these. What do you think went wrong? But I think we're still going to be within the first batch. So we're still going to be in the podium because I know there's a lot of work going into the act later on this year. But a few countries have stolen our march when it comes to being the pioneers of innovation. So that's the first question around what do you think, why do you think we've lost that pioneering spirit? And you see this even in terms of investment coming into the country and within the region. There's a lot of focus over the last 2 years going into West Africa because also the regulatory framework there is moving quite fast. That's the first question. Second question is related to that, but going to you, Victor, on if there are any real initiatives going on with M-Pesa. Because again, I think many people have mentioned M-Pesa is there, it's big, it's dominant, but to be honest, me and the rest of a lot of people in this room feel that you've kind of gotten complacent, so to speak. And I've gotten a yes from a certain corner. So we'd just like to get your sense, because I say this because Web3 and digital assets are going to be a huge part of how we conduct cross-border trade into the next decade and beyond. So, thank you.
Okay.
Over to you.
Okay, I'm guessing both questions are mine. Okay, I'll take the first one. I wouldn't say Kenya has slowed down. Actually, if you look at it, one of the few things our regulators are actually trying to do is ensure that we can modernize our regulation at the pace that is actually also very safe for Kenyans. Because if I'll take you one thing, Kenyans are very we experiment a lot. And we are some of the most daring, yourselves in fintech, you're some of the most daring individuals. You found out how to use something like blockchain and crypto on M-Pesa even before it was legal in this country. So you're looking at a situation where the innovation is moving fast, but the regulator, remember, regulators are about ensuring that they can maintain security and safety of your assets that exist as they are now. It's not about chasing just the future, but ensuring that you're safe now. So the regulator is trying to keep up, and these are some of the things like I mentioned. We are also trying to take them through the same journey. Yes, it kind of feels like it is a slow burn, but it is for the benefit of this country. I mean, think about it. There was a point when crypto took off. When many of us, I haven't tried it, but how many of us got burnt in the same crypto wave? 95, 99% of us got burnt. Why? Because we didn't understand it, and the way it played out for most of us is we got hurt. So this is some of the things that the regulator tries to see if they can at least protect the mwananchi from. But at the same time, the same regulator note has not quite blocked every way for you to try and experiment. In other countries, you try, by the way, you're going to jail. In Kenya, you do have to give our regulator some props in terms of they are also trying to be flexible where they can, as they also learn. So from that perspective, I would say the more we engage with the regulator, the more we also get partners to come in and, if you want to call it, advance the level of knowledge with our regulators, and also the likes of M-Pesa, is when we will move forward. Now, let me segue to the second question. Remember, M-Pesa came in at a point in time to solve for a specific problem. Now, as they always say, if you ever, where's my cheese, the book, the cheese is moving. Now, the problem that we also do face sometimes within M-Pesa is we do not want to force fit M-Pesa as it is into every problem, but allow, if you want to call it the ecosystem, to also then evolve, and then M-Pesa plays its part. And in some instances, where we can take the lead, we will take the lead. Where we piggyback and support, we will do that. But I think it would be unfair to expect M-Pesa to solve all the problems yet. Remember, if I asked you today, how many modes of payment are there in this country? You've got cash, yes, you've got mobile, you've got card, you've got your bank, you've got EFT, TT, so on and so forth. We power one of these. Yes, it is if you want to call it, it came in at a time to meet a specific need in the market. Well, I think it's a scenario where, again, all the players also then, you see, they say steel sharpens steel. So we need that to happen more and more in the market so that the market that does evolve. And then also there's a challenge within the market so that we can all compete. But I think I like the fact that you're giving the challenge to us in M-Pesa, so we'll consider the challenge taken, and we'll try and see what we can do around it. Though we do welcome collaboration and partnership through this journey, because it is the only way you can solve for all, to ensure the mwananchi can do what they want to do, where they want to do it, and how they want to do it. Otherwise, if I was to dictate it, I would make it work the way I want it to work, which I don't think is exactly what you're asking.
All right, everyone, thank you so much. Please say thank you to my panelists. They've been brilliant.
Thank you, Carol. Photo op, kindly. A photographer is right in front of you. I think mobile money has spoiled us, right? We are paid at the speed of a text. And probably some of you have a specific ringtone for that sender ID. So that, you know, money has come in. And, you know, I saw on LinkedIn, I think 2 weeks ago, the CEO of PayPal saying, you know what, we're now moving. We're doing something called PayPal World, where we want to move money at the speed of a text. I'm like, sounds very, very familiar. Been there, done that. And I liked Victor's response on if the regulator is a friend of when he said collaborator, which gives room for a love-hate relationship, because that's the truth of what it is. The gentleman asked a question around, or rather pointed a finger at the friction that exist in the sector. And my personal experience has been, you can't build in stealth, right? In an environment like this, either one, you get a big brother, big sister in terms of the organization that has, remember sandbox versus quicksand, that has a sandbox that works. You need to explain the use case. Like in the case of when you talk about crypto and stables, I know even the CBK is open to listening to use cases. And if you walk into the room and say, this is a specific use case you're partnering for, and these are the partners that are doing this, do you have an objection? If I need to be here every Friday after lunch, give me a breakdown of, we did 2 transactions, they went to this, and you're breaking down for them, then you become a friend. In the sense that when the regulations do open up, I always say opportunity meets preparedness. You'd give an opportunity to someone you've been engaging with, not someone who's been operating in the dark. So for most of us in this room, let's look at how to leverage these partnerships and say, we know it's going to be a slow burn, it's going to be 3-4 years, so do what you're doing right now to keep the lights on, knowing that when this opportunity comes, then it's going to be massive. You know, it just hit me as well why people flip licenses. You know, Tim said that they had a budget, 20 would go to dev, building the product, 30% to compliance. It got flipped, 70 to compliance, 30 or almost nothing to building the product. What becomes the product? The license, right? So you say, okay, we spend 100K. Dear investor, I'm looking for a go-to-market ready license, cost plus 50%, and that's how you get your return. So now let's not be surprised when you see business models in ordering. Why are there so many PSPs? Pokwa, do you know anyone looking for a license? Because that is the model now. You have absolutely no bandwidth left, and you're simply looking for the next guy who's saying, I've got money now, I don't have 2 years to wait for the rigor of getting compliant. So thanks a lot for that. Earlier I did mention that I think there's a Pan-African play, I think it's called PowerPay, that I've just gone live with Airtel. I think it's on 7-10 markets, powering that very use case. How do you then deal with moving money to Ghana in CDs, South African rand, all that? So we also have to respect, because many times I will defend Tim Green, Safaricom, for a little breath and say there's grant work that people do that remains invisible. That as a player, if you're coming to want to ride on those rails, be open to paying the tax or the toll, because like we said, if it does take this much grant work to be compliant in multiple jurisdictions, what then are you able or willing to pay for the access to something that then unlocks exponential value for you? If you plug in, you're live in 7, 10, 15 markets. Just a point to note on the dance on business models and the commercials that we need to look at to underpin some of the conversations that you're having. Now, building on our shared infrastructure imperative, we're now looking at our sector, BFSI, under attack, and how we can share risk and also scale defense. Earlier, we talked and confirmed that cyber threats are on the rise, and no one institution can claim to be immune. It is always a matter not of if, but of when. So whether it's ransomware, and the key one is the next one, which is insider threats, because we put all these guardrails outside, but what about the people who are inside? How do we also guard ourselves from that? So this next panel will give us practical strategies on how we protect trust, drive resilience, and ensure connectivity and ensure continuity in a hyper-connected era. Now, from Kenya to the UK, our moderator has a footprint that spans 10 countries, where he has delivered high-impact programs that fuse compliance with real-world resilience. He brings sharp insight and a global perspective and a deep passion in shaping responsible, future-proof cybersecurity cultures. Currently, he serves as the Global Cybersecurity and GRC Leader and Global Ambassador for Responsible AI Kenya at the Global Council for Responsible AI. George Njuguna, the stage is yours for you and your panel. Karibu. Welcome.
Good afternoon. Wow, it's been a morning packed with insight, conversations, and of course, practical insights to help us, improve operations when you go back to our businesses. So, yeah, but the conversation cannot be complete without talking about cybersecurity. And we can all agree that the banking, financial services, and insurance sector is under attack. Do we all agree? Yeah. So we are going to be discussing about how we can be able to collaborate and scale defense. And to help me do that, I have a powerhouse of panel. So kindly help me to welcome here on stage Mr. Francis Mwangi, who is the group head of IT security and infrastructure at Platcorp Group. We can give him a round of applause as he comes. Yeah, I know we've been mentioning M-Pesa a lot, and we are also privileged to have the executive head of cybersecurity, my good friend, Mr. Tim Deuri. So please help me welcome him on stage. We are also privileged to have Dr. Apriel Oichoe, who is the Senior Advisor Africa, Center for Strategic Cyberspace and International Studies. Kindly help me welcome Dr. Apriel. We also have Ms. Agnes Wambui, who is the Major Accounts Manager, East Africa at Fortinet. Kindly help me welcome Ms. Wambui. So you can all agree that from mobile money and APIs to third-party vendors and telco infrastructure, so the BFI, or rather the BFSI ecosystem is deeply connected. And to help us get the conversation started, maybe we need to appreciate the landscape. We usually say that we are in an ever-evolving threat landscape. And to help us understand where we currently stand, we have Mr. Francis. So maybe you can tell us, what's the most pressing cyber threat in BFSI today that's being underestimated or ignored?
All right, thank you. Thank you, George, and fellow panelists. Yes, I think BFSI, as you said, is under attack, and a lot of institutions in BFSI tend to focus more on the traditional threats, the ransomware, phishing, maybe DDoS attacks, and we even have ransomware as a service now. But there is, of course, an underlying issue that we need to look at, which is supply chain attacks, through third parties. Because when you consider, for instance, the third parties that most BFSIs are engaging, they are considered to be reputable third parties. And some of them even have, the credentials for it. Talk about even ISO 27001 certifications and such, like certifications and compliance that they meet. But they forget that even the most reputable third parties could have security lapses. And if they do not closely monitor these third parties, then attackers can take advantage of the weakest link, of that weak link, to be able to move laterally from the third party into the BFSI's ecosystem. Give you an example of a company called Target in the US, not really a BFSI, but they are a retail chain, and who experienced an attack. Information was leaked from their infrastructure because of a vulnerability with their third party. And who was this third party? It was a company called Fazio, which is basically a maintenance company for the HVAC, the heating, ventilation, and air conditioning service. So these guys had a system that was integrated to Target's infrastructure to allow them to log in to do maintenance on the heating, ventilation, and air conditioning services. So there was a gap, there was a vulnerability in that application, and the attackers were able to get in through that and move laterally into their systems. So you can see how detrimental it can be. So a lot of BFSIs are also not closely monitoring and re-authenticating these third parties. Talk about technologies like zero trust, where we normally say, always verify. Don't trust, but always verify. Yeah? Even if you're verified, you're authenticated the first time, just keep doing that, keep monitoring. Another thing that we look at is, Surav, one of the presenters from today morning, talked about organizations are spending 64% of their budgets on legacy technology or legacy applications. So what does that tell you? Obviously, with legacy applications comes what? Vulnerabilities, isn't it? So now, because of that, again, it also introduces another element of the threat landscape, and the attack surface increases because of that. So from my perspective, and also not to mention the issue of insider threats, which is also belabored as well. The people you have internally, and the kind of procedures that you have internally for offboarding people who are no longer within the organization. How well are these procedures being enforced and being applied within the organization, so that you don't have a situation where someone left the organization a while back, but their account can be reactivated and be used to carry out an attack. Yeah.
Well, thank you so much, Mr. Francis. And maybe from your submission, it's actually evident that no one is actually immune. I mean, the conversation shifted to, or rather from if to when. Yeah. And we've been talking about BFSI, the sector, and of course we cannot ignore Safaricom and M-Pesa, and especially in the Kenyan, or rather the East African context. And to Mr. Deuri, I know with Safaricom and M-Pesa national, scale, how do you protect not just M-Pesa Africa Safaricom, but also the broader financial ecosystem?
Good question. How do we protect the ecosystem? I think let me first start by contributing to similar panels with the wealth of information that we have. Myself, you saw Victor also participated in that same panel. We are able to disseminate some of this security information to our peers, to our partners, because all of the financial sector basically is our partners. Looking at that, it helps a lot, because it's not actually optional in my opinion, it's actually a requirement, because an organization in this dynamic environment cannot be secure on its own. It has to be secure together with all of its partners and suppliers who you have to work with. Like, for instance, the good example that Francis had given for Target. Target itself was secure, but its partners was not secure. So it meant invariably that you're only as strong as your weakest point. So therefore, it's important for us to be able to ensure all of our suppliers, all of our partners, all of our integrators that work with us, any partners, for instance, that where we share customer information, customer data, for instance, are secure, because if that partner is compromised, the customer will blame us. They will not care about their partner. And there are various ways of doing that. We contribute. We also host our own summits where we're able to share this security information. There's the Safaricom Cyber Summit. There's the Safaricom Decode, which also helps us to be able to upscale the security information and share some of the threat intel that we actually see. But more actively, if I was to take, for instance, an example for M-Pesa. For M-Pesa, we have a 24/7 monitoring team. And we're able to identify, for instance, for all our partners, especially SACCOs. Unfortunately, SACCOs previously had always been the weak point. They have access to finances, but because of various factors, they may not have that scale in terms of security. So we're able to prevent quite a lot of attacks where we see money flowing out. Typically for SACCOs, they would be breached. Then in the midnight, you'd see somebody's trying to send out money. A supplier security requirement, where we give them details of what are the requirements from a supplier security activity. It has to go through VPN, for instance. And this helps not only us, but also that partner, that supplier, to ensure that they also have that same level of security that we journey. We are not yet there 100%. It's something that we are still slowly continuing to improve the entire security ecosystem, but we are also seeing the benefits of that, because now in terms of our security breaches that we see from our partners have reduced significantly. We are talking of a more than 80% reduction in terms of the number of breaches that we are looking on. Yeah.
Well, thank you. Thank you so much, Mr. Tim, for that comprehensive response. And I think one thing that is coming out clear is that we can no longer continue operating in silos. I think you mentioned about partnerships with the third-party integrations and all that. And to help us understand the collaboration and shared defenses, I have my friend, Dr. Prel. What does real cross-institutional collaboration look like, and what's blocking it today?
Okay, first of all, real organizations, first of all, have to get to a point where they are talking to each other. I don't think we are at the point where we are truthfully talking to each other. And the biggest hindrance is actually an issue of, I believe from my experience, it's an issue of disparity when it comes to cybersecurity maturity. And cybersecurity maturity impacts the outputs of that are very big because you have the issue of trust. You also have the issue of challenges with interoperability. We need all these things for us to be able to collaborate. We also have issues with capacity. So if, and you know, it's two-pronged because for us to get to the level where organizations are mature in terms of cybersecurity, the inputs are collaboration and the output is collaboration. You see, so if we have a gap when it comes to collaboration, our inputs are not sound. So we have different cybersecurity maturity postures across, first of all, countries, across industries, and across organizations. And now, another input to that is our biggest problem is cybersecurity culture. We lack cybersecurity culture. It is a problem not only in Africa, it's a problem across the world. And this, I'm speaking from a point of confidence because this was actually my PhD study. I did the impact of organizational culture on cybersecurity and cybersecurity culture. So when you look at how different organizations operate, they create a gap when it comes to collaboration. Because one, again, I've mentioned, there's a lack of trust. We don't have systems that integrate or that can talk to each other because we don't have standardization when it comes to policy, when it comes to technology, when it comes to process. So how are we supposed to get together to actually identify threats that we are experiencing across the globe if we don't have standardization? We cannot speak the same language. And so if we can't speak the same language, then it means that we can't get to the table to discuss the challenges that we are experiencing. We cannot integrate our technologies to feed off each other. We cannot trust each other. We have, again, someone spoke about differences in regulation. So we see all these differences in regulation and regulatory requirements. We have issues of data localization, data residency, and all these things bring up the issue of distrust among nations, among organizations. So an ideal, you said what would an ideal cross-border or cross-transfer of information look like? The first thing would be, we need standardization. Francis talked about trust. We cannot share information if we do not trust each other. We need a culture of cybersecurity. Organizations definitely are different, but we need causes, challenges, that collaboration, because we lack trust. That collaboration, because we lack trust. So it's like a complete system where we have inputs, we have the operation, what we're looking at, and we have the outputs. So we need to fix the inputs first. What does our culture look like? Because culture impacts on our capacity. Culture impacts on governance. Culture impacts on collaboration. Culture impacts on everything that we can think of when we are talking about cybersecurity.
Wow, thank you so much, Dr. And I think it's a lot to learn from your submission, from trust to standardization, baselines, collaboration, and all that. And I hope you are getting your questions ready to engage our panelists. And I think Dr. mentioned about sharing of information and intelligence, and maybe to help us understand how we can be able to share this intelligence. Angie, what are maybe the threat intelligence sharing or shared defense models that we have seen them working today, and why?
I think from where I sit, it's more of, as you're sharing the information,
you also need to trust whom you're sharing it with. And I think where we sit within Africa, you'll find that I may not want to share my info because I'm not sure if someone is trusting or what they'll do with that information. And I think if you have boundaries or this, something that has been put in place, it means you're protected and you'll be open to share. Like, for example, if you find an organization has been hacked today, most of them will not share with their peers. Let's say it's a bank. But if they share that they've been hacked, then the other bank will be helped with that information to see where they can protect themselves from being attacked the same way, or put in place measures to make sure that they're safe. So for me, I'm looking at it, and I know Dr. has mentioned about the trust, whereby we need the two parties to trust each other, and obviously from there then you can use the info accordingly to whatever you've gotten from the other party.
Well, thank you so much, Angie. And maybe just before we take a question from the floor, I would like to pose a question to you, our audience. Maybe by a show of hands, how many of you feel like maybe your organization is part of an effective cross-institutional cyber defense network? How many? Maybe anyone who is willing to share?
I would be concerned if there is nobody here who's part of an organization where cyber defense is that prioritized.
Yeah. Anyone who would like to maybe share with us? Or maybe another one. How will the collaboration be made easier? Is it through trust? Is it through tech? Is it through partnership or a regulation? Anyone who might want to tell us in a minute or so? Yeah, sure. I have a hand there.
Good afternoon, everyone. I'm Moses from Fortinet. So I think for us as a vendor who are into cybersecurity, I think threat intelligence is very key. How we share threat vectors with other vendors is very critical. So as much as customers will be able to have infrastructure secured by Fortinet, we're also cognizant of the fact that we need to share intelligence with other vendors. So we can share intelligence with Cisco, Palo, name it. And this is just to make sure that we're building defenses. And I like drawing this analogy in physical warfare. There's no way you'll have guys fighting in, name it, Russia, and there's no way these guys are not sharing intelligence with one another. They have to share intelligence with one another so they can know, especially the soldiers. The form of communication has to be very clear to know where adversaries are. Nations are also sharing intelligence on threat actors. So it's the same thing to cyber security. It's a cyber warfare. So we need to be able to have that intelligence shared across border and have the infrastructure that enables that. Thanks.
Wow. Thank you so much for that. And
I wanted to chip in also on
sure,
that.
Sure, Mr. Tim.
Even looking at that sharing of threat intel during cyber warfare, I think most of you can remember the time when we experienced the DDoS attacks from, it was the anonymous Sudan attack, which really crippled access to, for instance, the M-Pesa app. I think we took quite a bit of learnings from that, and we even used those learnings to actually share that threat intel, the IPs we could see that were bombarding us with malicious traffic, with volumetric traffic, and shared it actually amongst other telcos. So it actually, if you noticed, for those of you who followed, Anonymous Sudan also tried to attack telcos, and because of the threat intel we had actually shared in that community, it actually reduced the impact of that. I know Safaricom was very prominent in all of that, but from our suffering, we were able to help others to improve on the same. Yeah. So and it's very important. So we also now, even within Africa, within East Africa, with Southern Africa, we share quite a bit of threat intel whenever you see, for instance, malicious attackers who are trying to compromise our infrastructure as a critical infrastructure provider, and it has helped. There are very many incidences, potential incidences, which have been disrupted just because of that.
Wow. George, I was just going to comment and say, I was wondering when Tim was going to bring that up. But anyway, on a light note. But I think also, coming back to the trust element, one way in which organizations can be able to sort of gain confidence in that trust sharing platform is when we determine what can be shared and what can't be shared. and also just build the mechanism around which we are sharing this information. So we are abstracting and anonymizing the data. If it's personal identifiable information, that's not being shared. It's just issues to do with the overall threat intelligence, the indicators of compromise, you know, the phishing domains and stuff like that, information that's not going to breach confidentiality. And so maybe the first place would be to establish, I know this word is used a lot, but a framework under which this can be done. And maybe for every organization to have a representative that participates or sits in that threat intelligence sharing community. Yeah.
Well, thank you, Mr. Francis, for that contribution. And we can all agree that, of course, this conversation couldn't have come at a better time like this. So I don't know, maybe is there anyone with a question to our esteemed panelists? Sure, we can take the first two.
Thank you. When it comes to incident response in our SOC, I'm sure we get a number of false positives. So how do we mitigate that alert fatigue in our teams?
I can take that. Sure. I'll first start by using the two-letter word that has become the buzzword for everything, AI. That is the only time I'll mention it. So I think using machine learning, using natural language processing, we've been able to reduce the number of false positives because over there, I mean, I remember like 8-9 years ago, the number of false positives, and remember we were monitoring even less then. The number of false positives which were there were quite a lot. In fact, it impacted me once. I think there was a script that was running on my machine. Then somebody in the SOC, IT SOC within our team, actually blocked my laptop from accessing the network. It was very frustrating. After a victim, you once bitten, twice shy. So I think now when we look at the current levels of false positive, we are talking of single digits here. And it's based on this learning. So we're able to see that, for instance, if team is running something suspicious, that's a lower risk. That one we need to confirm. But if it is somebody else, maybe from our call center or from our retail center, that might be a higher risk exposure. So taking in all that context and metadata has helped us reduce that false positive rate.
Doesn't that also now bring up the question of AI security as well? Or have you solved that bit? And also, the AI can also hallucinate and create more false positives. So how have you seen that?
You've gone down another rabbit hole. Yes, introducing AI also introduces additional risks. Because the issue, like for instance, when we were rolling out Copilot is, can the training data, first of all, we got assurance from Microsoft that whatever our staff are entering into Copilot will not be used to train other models. Somebody may enter something there confidential, and then Airtel, for instance, uses that same Copilot, then can they be able to exfiltrate the data through that? So we got that assurance from Microsoft, from a contractual perspective, that was in place. The second risk was that even within the company, we have different levels of classification of information. For instance, our cybersecurity team, they use Copilot, for instance, for analyzing logs, for instance, to be able to make sense and see you dump their whole log file, and then it's able to summarize for you very quickly and pick out any anomalies. But now we don't want that data now being used or being accessed by, for instance, somebody in our call center or our retail center who does not need access to that particular information. So it's something also we needed to go in and check from a configuration perspective that the data is segregated and it cannot flow out to where it was not intended to flow out. But yeah, it's not something, we're still learning, to be honest. We're still learning quite a bit in terms of providing AI cybersecurity assurance. We are rolling out, the technology teams are very agile. They are rolling out new large language models, for instance, to be able to pick up data and analyze from it. And we are still struggling to understand and develop new frameworks to be able to provide assurance from that.
Thank you. I think we also had another question.
Okay, it's fine. Hi, my name is Marcy. I'm from PwC. My team specializes in digital and cyber fraud. So I have a question. We've had very interesting submissions here from Rosemary, who gave us something very interesting to consider in terms of open finance and what the two ladies have discussed. Now, given the current situation as is, yeah, where the regulator hasn't come in and stepped in and made all these frameworks that you need for things like now sharing of information, and I'm speaking from a practical point of view where we've noted even in the market, whether it's especially related to payment fraud, you'll have threat actors move from one bank to another institution, doing something similar, learning as they go, and at the end of the trail, you wish maybe these three institutions had shared this knowledge. So given the situation as is right now, there isn't much of a framework or a regulation, or, and I liked the example that you gave. What can be practically done in a way that doesn't really rely on waiting for this, I don't want to say unicorn, but this, this one thing that we all need to get behind it, but what can practically be done to speed up this process or even get the sector moving towards it? And maybe that's a bit an open question to all of you, but I'd definitely love to hear maybe Tim's perspective, given what happened with the DDoS attack.
I was hoping someone else would pick up that question. But yeah, I think, to be honest, if I was to get the last part of your question, I think there'll never be a time when we'll say we'll be comfortable we are there in terms of knowledge sharing. I like what CA had implemented in terms of implementing ASAT, where, for instance, from a telco side, we actually share information which doesn't have any PII data, so that we can be able to Airtel, Telcom, and vice versa can be able to share that particular data. From a financial perspective, we have forums, katibas, sort of, for both even banking partners. From a fraud perspective, we used to see, especially like, I don't know, for those of you who are in the banking sector, banking fraud, the Molot guys, they are very agile. I really look up to them, because whenever there's a new product which we release, they're the first ones to test that product and quickly detect any weaknesses that are there. But we have these katibas where we're able to share information, fraud information. So right now, even, for instance, whenever we have fraud cases, they're able to quickly share that information and pin it down. We've had fraud cases that even as of yesterday, where money was flowing through different accounts, M-Pesa, banking, and quickly the fraud teams were able to lock the funds that is there. Of course, it's hard for large enterprises like ours to be as agile as the Mulot guys, or even any fraudsters who are out there. It's a catch-up game, but I think we are doing okay, not too badly off in terms of getting there. I think maybe just to add up onto that, I think one thing that we also need to do is also expand this, so that we also incorporate other SMEs, other smaller players. You find right now, in my honest opinion, I see from where we are seeing, even from where the M-Pesa frauds we are seeing, they are targeting SMEs because they know that's a potential weakness. It's a low-hanging fruit for them. We need to be able to get them on board, so that even within their limited capability, I'm not expecting them to have the budget that I have here in M-Pesa, but even within their limited capability, if they can be able to upgrade, they can be able to take advantage of the security systems, the security frameworks, of the security tools which we have, then that will secure the entire ecosystem. Because if one person is hacked, then it means we have all failed somewhere.
Wow. I think maybe just quickly to add on to that, and I think I got you clearly, like before we talk about getting these frameworks and guidelines in place, what can we do in the meantime? And I think a very low-hanging fruit is the communities that we're talking about, these intelligence communities that we're talking about. I think we see it all the time, where people post something on a community forum and say, I'm having this issue, there's a struggle that I'm having, has someone experienced this, how do I go about it? So it can be done in such a way that you're not in breach of any kind of regulation or law, but it's in a safe space per se, because it's really high level before we actually now move towards getting the actual mechanism and infrastructure in place. Yeah.
Okay. Sorry.
Sure.
Let me just add on to that. So as we've been talking, we can see that there are different levels or different avenues and mechanisms that are being taken across from a country perspective, from an industry perspective, and from organizational perspectives to actually try and sort out these problems. So when we look at stuff like from a country or regional perspective, we have stuff like the Malabo Convention, which a lot of countries are yet to, to accede to. So the industry, the global industry has thought of mechanisms in which we can actually sort out this problem from top to bottom. Now, the low-hanging fruits that we are talking about, so we have those community, I won't repeat that, but we also have challenges when it comes to industry-specific cybersecurity challenges. And that is also another low-hanging fruit because industries have specific standards that you don't need to wait for a law to come and actually define for you that, this is what cyber crime looks like, or this is what forensic incidents or issues look like. And so we have also regional organizations like FIRST, for example. FIRST is a regional organization for SATs and incident response teams. And what they do is try to define common languages and common standards and tools that can be used by different countries. And you don't really need to be Safaricom for you to actually join FIRST. So we have institutions that have come out here and have said, okay, we are providing this information. Take advantage, I would say take advantage of that. I'm also part of the Commonwealth Cyber Fellowship, Africa Cyber Fellowship, and just last month we published a toolkit for incident response teams, and it is free. If you go to the Commonwealth website, you'll actually get all these things, all this information. You'll get access to the toolkit, and we have defined all the different things that you need, from policies to processes to giving examples of tools and stuff like that. So there is actually information out there that you can take advantage of to help you move from waiting to actually being proactive.
Wow. Oh, thank you so much, Dr. Iri, for that. Unfortunately, our time is up, but I know it's a conversation that will continue over lunch. But one thing is clear, that scaling cyber defenses is a shared responsibility. Maybe just to bring this to a close, to my distinguished panelists, in 1 minute, just 1 minute, in one sentence, maybe what's one action that every BFSI institution should take this year to strengthen the sector-wide resilience? Maybe we could start with Angie.
For me, what the advice would be to avoid siloed solutions. Go for a solution that will work, or work with other solutions that you have that will integrate well. I know she asked of a question where it's false positives. If you leverage on different solutions within what you've already purchased, you'll avoid the gap in terms of when you have like siloed system, which only give you maybe more false positives, but now you can leverage on the different solutions that you have and work with those, the report that they're going to provide within your aspect. But more for me, it's more going for the integrated solutions and not working with a siloed based.
Wow, thank you. Angie, Dr. Iri?
Okay. For me, I'll just reiterate what I have just said right now. I think organizations need to actually take it upon themselves to be proactive. Don't wait, because at the end of the day, the cyber risk belongs to you as an organization. So if I wait to partner with Safaricom, for Safaricom to produce, information that I can write on, I'm shooting myself in the foot. So we can actually take advantage of the information that is out there to build our capacities, to gain understanding of what cyber threat looks like in our particular environment. We can be proactive in training our teams. As little training as basic as is possible, because the problems of cybersecurity, again, I will reiterate, are a human problem. They are a human challenge. So if we work from that aspect of educating our teams, being proactive as organizations, then collaboration becomes easier, because what we are doing is we are placing ourselves in positions where others can trust us.
For sure. And thank you so much, Dr.
I think mine would be simply, you cannot stand on your own. It is more important to be able to share, to be part of a network where you'll be able to receive, where you can be able to receive cyber intelligence, cyber threat. If you are alone, you are an easy target. And for financial sector, within the SACCO forums, because there are SACCO forums, the banking forums, there's quite a lot of information, sensitive threat intel which is shared. For those outside that, even within the vendors, within your security vendors, they are very different, and I think most of these security vendors you can see up there also have their own forums where they share this threat intel. So I think it's important for each to be able to get that intel and be ahead of the threat actors, because the threat actors collaborate quite a bit. Whenever they see one particular vulnerability here, they work together to be able to see how they can penetrate so they can share their proceeds. So it also makes sense for you yourself to also collaborate and join these forums.
Thank you, Tim. Francis.
Okay, so I think I'll begin by saying, shared infrastructure does not mean shared vulnerabilities. But when we talk about shared intelligence, that results in shared resiliency for organizations. So we need to break those silos. And at the end of the day, I'll go back to what Dr. said about culture. Culture has to start at the top. So even at the board and executive levels of these different organizations need to be able to speak to each other, need to be able to collaborate with each other, because collaboration has to start at that level before it can trickle down to the rest of the organization. So, yeah.
For sure, and thank you so much. So I think there's an African proverb that usually says that no matter how sharp your teeth are, you cannot bite water. And from the conversation that we are having here, it is clear and evident that we can no longer continue operating in silo. So, operating in the traditional silo is akin to biting water with your teeth. So thank you so much, my distinguished panelists, and to all of you for being part of this urgent conversation. Thank you so much.
I bet some of you tried it in your mind, the biting water bit. Right? You're like, maybe I can. I'll continue to challenge us today, and we've spoken about how little we probably use the licenses that we have. Your organizations have a budget, you're spending $200,000 a year, yet your biggest point of vulnerability is someone on your supply side. How about we think of extending that value? Because we hardly ever fully utilize the licenses that we pay for. How about you extend that to your supply side and enable them to then close any gaps that there may be? I remember Google buying a cybersecurity concern, and I remember looking at those prices and saying, for my medium-sized organization, there's absolutely no way you can afford those rates. But if I'm working with a large telco or a large insurance company that probably has that as part of the stack, is there any way that they can extend that? And you already know that per second billing transformed the telco space for us. We know that a concept called lipa mdogo mdogo as well, where you can get infrastructure and pay for it over time, has transformed access to services. How about you look at that from an enterprise level and say, hey, I have a license that costs me X $1,000, I can give you a piece, or if you can pay for a piece of that action, I can support 1,000 of you, and then we're able to really have full utility of that. What was missing from this conversation, however, was the insider threat bit. And I highly doubt we have any HR people in the room. One of the things I feel some type of way about is that, for example, if in your SACCO you have someone who does something nefarious, what happens? It is not announced. Someone is let go of silently, and they seek greener pastures in yet another SACCO or yet another MFI. Rinse, repeat. It's only that when people come and cry in WhatsApp groups, you said, oh, by the way, give me a pulse on person X. Like, wait a minute. You mean you hired that guy? He came and did ABCD, or you hired those set of guys. So how do we also mitigate the insider threat? And yes, you're talking about technology, APIs, cloud this, looking at, but inside, yes, you've got all these ISO things, biometric check, no one is leaving the office, everything is, but still, that HR process and that collective gut feels to be missing. So maybe it's not the tech side of things, but probably one of our biggest points of exposure that we need to look at as organizations. We now take a break for lunch. Ladies and gentlemen, I kindly request that you make it back here at or by 3 p.m., because we're then going to break out into breakout rooms. This is the main plenary. The other plenaries will then be open to my left and to my right. Outside, there'll be guidance on what session is happening where. And we hope to see you promptly at 3 p.m. Bon appetit.
You go bow for the result, oh. Nothing to discuss, oh. Cause I did win by default and without any doubt, oh. I'm a me happy adult, oh. I no go feed the girl, I no go feed the girl insult, oh. I'm a mind that's with the talk, oh. I put my life into my job and I know I'm in trouble. She manipulate my love, oh. I know holy and I know that get both. Like the Baba Frayo, my ayo, don't cry, yo. I need to go and shadow. 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 Shadow. I need to go and shadow. I need to go and shadow. I need to go and shadow. I dey Port run then kill Soboma. I dey try to buy moto, one Toyota Corolla. My feelings been they swing like Django Lover. Feelings been they swing like Django Lover. Now you crash your Ferrari for Lucky Bona. Now so much you remake could have been all over. My feelings today swing like Django Lover. Feelings today swing like Timbani at you. I'm a white dog in Fenisu. Why you say I did nothing for you when if I do anything you want me to do? Timbani at you. I'm a white dog in Fenisu. Why you say I did nothing for you when if I do anything you want me to do? Maybe another time, maybe another life. You will be my wife and we'll get it right. Young cast, last. Now everybody go chop breakfast. Have to say bye-bye, yo. Bye-bye, yo. To the love of my life. My ayo, don't cry, yo. I need to go and shadow. 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 I need to go and
come to smoke cannabis. Doctor say make a pop one of this. Make me fly like say I'm Aladdin. Come bring some kind melodies. Oh, mama, myself no do pass like this. So many things inside of my jeans. Slide down, DBT, DBT.